Imagine you are attending an interview and you are asked to evaluate a business, but you have to choose any one of the statement, either balance sheet or P&L statement or cash flow statement. Which statement you can choose or which statement you should choose? I would say cash flow statement, because cash flow statement can communicate a lot about what has happened in the entity, which the statement of profit and loss or the balance sheet may not reveal on the face. What are they? Let's see. Cash flow statement will classify the activities of the business into three types, like cash flow from operating activity, investment activity, and financing activity. So by looking at cash flow from operating activity, you get to know what is the profit made by the business, what are the non-cash items that have been accounted for. You get to know what are the changes that are happening in working capital. That is, how much of the sales were not yet converted as cash, how much of the payments are yet to be made. All those things will come to light when you look at cash flow from operating activity. And more than that, you get that critical information, the difference between the profit reported and actual cash generated through operations. That information will not be available on the face in the P&L or balance sheet. Next, by looking at the cash flow from investment activity, you get to know what are the investments made during the year, what are the investments that are cleared of sold, and what are the gains they are getting because of holding the investments. Okay, so those kind of critical information in one shot is possible in cash flow from investment activity. And by looking at the cash flow from financing activity, you get to know the money raised for the business from the owners, from the outsiders, and the money repaid and the interest paid, the dividend paid, all information. It means it is going to show the critical flow in the business, that is cash flow. And by summing all this, you get to know what is the cash generated during the year. And this will also act as a reconciliation statement, because with this, if you are going to add the opening cash and cash equivalent position, you are also going to get the closing cash and cash equivalent. So it's such a powerful statement. It can communicate a lot of information which a P&L and balance sheet cannot communicate on standalone basis. Of course, all the values in cash flow statements are derived by using these two statements only, P&L and balance sheet, but it can communicate a lot more. And do you know one thing? In business, cash is king, and this statement clearly demonstrates that.